Hello and welcome to our conversation. And today's conversation is knowing a company, KYC, and today's company is the Zoom Communications. What is Zoom all about? Zoom has become our go-to tool for running company meetings and hosting webinars. In the recent past, everyone is talking about having Zoom classes, Zoom meetings, interactions, conversation with the friends, colleagues, teachers, students, and relatives. Zoom Video Communications is an American remote conferencing services company headquartered in California. It provides a remote conferencing service that combines video conferencing, online meetings, chat, and mobile collaborations. It was incorporated in April 2011 under the original name of SASB. In February 2012, changed its name to Zoom Communications. And in May 2012, it changed the name to Zoom Video Communications. And this is the person behind the company, Eric Yuan. He's the founder and CEO of Zoom Video Communications. Eric founded this company in 2011 to deliver happiness and bring teams together to get more done in a frictionless video environment. And prior to founding Zoom, Eric was a corporate vice president of engineering at Cisco, and he was also one of the founding engineers and the vice presidents of engineering at WebEx. Later, WebEx was taken over by Cisco, and while being at Cisco, he conceptualized and designed this company called Zoom. In 2019, he was added to Bloomberg 50 as a leader who changed the game in global business. Last year, in April 2019, Zoom Video went public by issuing shares, 20 million shares at a price of 36 per share, and raised 752 million. And from then onwards, the price went on skyrocketing. So it is necessary and it will be useful for us to observe what and how did the price change over this period of 1 year. What we can observe is the change in a price over a period of time has been happening continuously. If I see last 1 year price, that the Zoom price was 62 and went up to 134 on March 23rd, or 156 even. If I pick up last 6 months, we can also see continuous rise. And it's important to observe last 3 months when the world is witnessing one of the worst pandemics of the time, and the price was 73 or rather 65 on December and went up to 150, 159 on March 23rd. And if you observe the market capitalization during this period, the market capitalization during this period also changed during this last 6 months, and market capitalization started with 7 billion in April 2019 and is at present the market capitalization is $37 billion. So $7 billion company in a year has become $37 billion, more than 5 times. So the change in the price and the change in the market capitalization is it supported by the fundamentals of the company? Is the market change in the price is also supported by the fundamentals is a question the analysts and investors keep on asking. In order to understand that, let us see some of the fundamentals of the company. And here I would like to focus on the top line, that is the revenue, the bottom line, that is the profit, some of the important expenses, cash flows. In the process, I will take you through the income statement, balance sheet, and cash flow statement. We already saw the price. Now let us see the revenue of the company. The revenue or the sales, the top line, was 61 million in 2017, now 623 million in 2020. In a period of 4 years, the revenue multiplied by 10 times. The increase in the revenue is to a large extent due to more and more consumers or customers starting using Zoom. The company added 2.2 million active users so far in 2020, which is far above, well above what they did in the last year, 2019, during which period it added 1.9 million users. The numbers, though the site of the website of the company does not reveal the number of customers, but from the secondary sources, as I got this graph, which shows that in 2013, the company had 4,500 customers. And by 2017, it has become 700,000. And today it may be into millions. To attract the customers, Zoom follows a freemium pricing model. The freemium pricing model is normally recommended for gaining entry into an existing market, which is what Zoom is doing with their basic plan. Zoom's video conferencing features are free for everyone to use up to 40 minutes. So in the process, the company is attracting more and more users to log on to Zoom and take benefits of the video conferencing facilities. And this 40 minutes, it was also, the website says, Zoom decided on 40 minutes because they found through research that 45 minutes is the ideal duration for a video conferencing session. Another interesting and important metrics to understand the popularity of the company with the customers is a Net Promoter Score. The Net Promoter Score is a customer loyalty metric that measures the customer's willingness not only to return to make another purchase, but also to but also to recommend the company to the other users. And the net promoter score of Zoom video is 62. Now, is this 62 a good number? Is an important question. It has been said that net promoter score is a number from -100 to +100. Scores higher than 0 are typically considered to be good, and scores above 50 are considered to be excellent. The industry average for the technology and the software companies is 58, and Zoom's NPS is 62. Now let us observe this in this scale of Z -100 to +100. So Zoom is 62. Some of our other well-known companies like Facebook is -21. And there are several companies over this between -100 to +100. We can also see that other technology companies like Apple Cloud is having 62. SAS Institute is having 57. So therefore, Zoom is said to be in the company of well-known corporate entities. So because of the customers' happiness, because of the efforts made by the company, the number of customers has been rising, and they have customers in over 180 countries. And during this period, revenue rocketed 188% to 600 million. And the growth was driven by addition to the new customers, as well as the expansion of services to the existing customers. It has been found and mentioned by the company that existing customers are spending about 30 to 50% more on Zoom services over the previous year. Its customers include companies like Uber, which average about 40 million minutes per month, companies like Discovery. It has the customer base of 6,900 educational institutes, and 90% of the top 200 US universities are in the list. In the recent past, several educational institutes of India also started using Zoom. Customers contributing more than $100,000 has increased by 86%. This itself gives us an idea that the company's revenues are increasing not only because of the new customers, but also because of the existing customers. And this is partly because of the focus of the top management. And to quote the CEO, it says, "For the moment we founded Zoom, our main focus has been to provide a cloud video communication solution that would make our customers happy. That focus has contributed to guide all our innovations, partnerships, and other initiatives. The fantastic growth we are experiencing and many industry accolades we have received can all be attributed to having satisfied customers that enjoy using our platform." So the company knows, recognizes, and realizes the importance of maintaining good relationship with the customers by providing good service. Now let us see some more financials, and one of them is a balance sheet. Now, when we we see the balance sheet, it's important to observe the change in the equity, change in the assets. You can see that the equity of the company increased from 133 million to 834 million during the last 2 years. Equity consists of capital and reserves consists of the share premium and the retained profit. The reserves was minus 27 million, has become plus 800 and positive 834 million. This is because of the profits that Zoom has been making in the last 2 years, and also the share premium that it has actually issued the shares at a premium while converting the redeemable preferred stock into common shares or equity capital. Similarly, we can also observe the assets. Assets have been consistently rising, and let us see the composition of the current asset. A significant part of the current asset is cash in hand, and this cash is a presence of such a huge amount of cash on a balance sheet conveys an important message to the existing and the potential shareholders that despite the money being spent by the company on R&D, sales, and creation of asset, it's still having cash on its balance sheet, means that in the near future, the company may grow further, either by creating more assets or by acquiring other technology companies. Maybe in the near future, we'll see more mergers and acquisitions happening in that sector. Now let us see the income statement of the company. In the income statement, I'll focus on the top line, that is sales, bottom line is the profit, and some of the important expenses. We've already seen that the sales have increased from 60 million to 622 million, from 17 to 20. The profit, gross profit increased from 45 million to 500 million. And the net profit before tax increased from less than 1 million to 26 million in a period of 4 years. So therefore, all the components of income statement, or rather all important components of income statement, conveying a very positive message to the market. The top line is rising, then the bottom line is also rising. I'd like to pick up two important items on the income statement, that is the selling and distribution expenses and the R&D expenses. The selling and distribution, we can see that all through these 4 years, Zoom has been spending about 59 to 69% of the revenue on selling and distribution. This itself gives us a very important message that Zoom is operating in a very, very competitive market. It has to spend money to attract customers. It has to spend money to retain customers. It has to spend money to service those customers. So SGA is being consistently rising, or rather they're maintaining the spending a significant part of the revenue on selling and distribution. Whereas on R&D, the money spent on R&D is in the range of 10 to 15%. We'll see later the low R&D is partly because of the fact that the significant part of the R&D of Zoom is happening in China, where the wages and expenses may be relatively lower. It has its own limitations, we'll see later. So therefore, the rising revenue is because the company is trying to attract customers and by aggressive marketing strategies. Is the company able to convert the profit into cash? Is the next question. They say that it is not enough to create profit or generate profit. it's important that we convert the profit into cash. For that, we need to understand the cash flows. And when we say cash flows, we need to understand cash from operations, which will tell us about the money generated from the business. Cash from investment, which will tell us about, is the company creating more assets? And cash from financing will tell us about, is the company able to raise money from the market? So we can see here that the CFO of Zoom has been consistently rising from 9 million to 157 million in the last 4 years. So that means the company is not only making profit, but is able to convert the profit into cash. And what is it doing with the cash? The cash that they have generated from the operations and also the money raised from financing various sources, they're using to create more assets. So the negative CFR is an indication of the fact that the company is using the fund cash raised to create more and more assets. So rising revenue, increasing profit, consistent negative CFI, and consistent positive CFO is a sign of a fundamentally strong company. So Zoom is having all positive CFO, positive revenues, positive profit, and increase in the corresponding increase in the assets. So therefore, the rise in the price of Zoom is said to be supported by, backed by reasonably strong fundamentals as of now. So the company has also mentioned some highlighted, given some caveats regarding the risks. Two important risks they mention is the increased competitions and cybersecurity. Threats as a concern that investors should be aware of. This is what they mention in their IPO document. It also notes that a large research and development operations in China, where it employed more than 500 people. And this could expose the company to market scrutiny regarding the integrity of solutions or data security features. So the onus is on the company to take care of the cybersecurity and the excess dependence on Chinese research and development. And these two have been mentioned by the company in its IPO document. Is it a bubble? Is another question that some equity investors have been asking. That will the stock market or the price keep on rising, or will it end on the market as a bubble? So let us observe that and see it. So is it a bubble? Buyer beware. Just because we are in a horrible bear market doesn't mean that bubbles can't form. So the equity analysts have been saying, will this continuous rise sustain? In order to answer that question from this article, I would like to pick up the interview where their CFO highlighted some of the problems or the limitations of the company. She said that we have definitely seen an uptick in the usage, but a lot of that is on a free side. So that means because of the freemium pricing policy strategy, they have more and more users of their services, and all these users have not become the paid customers. So she says that it is very early to tell whether or not that's going to be converted into a long-term paying customers. So what's the problem? Because more and more users, the company is under pressure to create more capacity, and in the process, invest more money on assets. And creation of assets will lead to outflow of cash and will affect the bottom line through depreciation and interest. So in other words, at present, Zoom is not profiting very much from the incremental usage from the increase in the number of customers. So it's necessary for the company to convert the users into customers. Let us also see another data. The other technology companies' revenues also increase quarterly. Growth is in the range of 35 to 75%. Zoom's revenue increased by 77%. But the matter of the concern is about the price to sales. Price means the share price. The share price to sales ratio is 63 times in case of Zoom. Whereas in all other cases, it is in the range of 15 to 25%. So therefore, there is a concern whether the market, whether the Zoom is a bubble. So could Zoom actually grow into this valuation is an important question. So therefore, this concerns that the price of the share will increase or not, will continue to increase or not, continues to be there in the minds of the analysts and the users. However, the management is happy. The investors are happy. The management, particularly the CEO, says we have happy employees, we have happy customers, and we have happy investors. In his first quarter 2020 earnings call, he said, we do all we can to make sure every employee is happy every morning. So this happy employees is, he expects will continue, and those employees will create the value for the company. As per the behavior of the stock market, we can definitely say that investors as of now are definitely happy. Similarly, both the users and the customers of late are definitely happy. We have seen that because of high NPS. We have seen that the numbers of both customers and users have been rising. We have also seen because of that the revenue has been rising. So with happy employees, happy investors, happy customers, we are of view that Zoom will continue to do well in both at the customers end as well as the investors end. So keep zooming. Thank you very much.